everybody. Welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, let's do a quick systems check. If you would, just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that there's risk involved when you trade. So you want to manage your risk in a way that makes sense. For your risk tolerance, your balance size, etc. And we'll go over some ideas in that regard using some of the tools within our WebTrader platform that really simplifies how you manage your risk and calculate exposure, and that right there in the order window with some of the risk management tools. And we also have another tool called AvaProtect that helps you manage risk in a unique way as well. If we get a chance, maybe we'll do some examples with that. And keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can first take a quick look at our app. And so whether you're trading on the MT4 platform or the MT5 platform, you can trade on both from our app from one location. And what you'll see, you can download it from the major app stores. What you'll see when you're in our app is that it has the same advanced functionalities and tools that you find in our WebTrader. And so they offer the same level of help in terms of technical analysis, fundamental analysis, signals, etc. within the app and our WebTrader. Now, we'll go ahead and log into the WebTrader, which you can get into from our main website, logging in the upper right corner here, just using your email address and password that you created when you opened your account. And so the WebTrader looks like this, similar look and feel as our app. Now, I know today's a technical analysis webinar, but you always want to keep in mind what's happening in terms of the fundamentals as well. Kind of a quiet day today, really, in terms of fundamental news. There were some announcements out of Great Britain that were somewhat significant, showing that inflation has really come down. There was data showing, I think, 2% in inflation on the latest numbers. And if you ever want to look at any of the economic announcements, they're on our economic calendar. And in a fundamental analysis webinar that I do actually tomorrow, we go over how to use the tools really to analyze the past announcements and predict movements depending on how the numbers come in. There are advanced tools here. But just real quick for today's purposes, you can quickly browse over announcements. And for any country, you can limit the number of countries that are involved here so that you don't have to look at announcements you're not interested in. But if we take a look at what came out of Great Britain, inflation rate data, as I alluded to, the year-over-year inflation rate has dropped down to about 2%. Now, it's slightly higher than expected. The expectation was a drop from 2.3 to 1.9. It dropped to 2%. I think in the U.S., they would take that number and be very happy to have it come down that low. The target is somewhere around 2% in the U.S. Looks like they expected a little bit more dropping here, but still, it's a nice sign for those of you concerned with inflation being too high that indeed it's come down pretty nice here for Great Britain. Hopefully the same can follow suit eventually in other areas around the world. And we see the month over month came in as expected. The core inflation rate came down, but again, just missed it by a tick in terms of dropping to where it was expected to drop, but did come down from 3.9 to 3.5. And so this was really the biggest data that came in on the economic calendar today. And in terms of headlines, no real major headlines that I've seen that have come in fundamentally. So maybe some choppy movement on the pound with those numbers, showing a decrease in inflation, but slightly less than expected. So I don't think that would cause necessarily a big run in one direction or another with the pairings with the Great Britain pound. But we can have a look at that and keep that in mind as we go into looking maybe at the technical setup, the technical signals, etc. Now, out of the US tomorrow and out of the UK, we've got a rate decision coming out of the UK tomorrow. It's expected that the interest rate will be kept the same. You never know. But usually the expectation is how it comes in. So it's expected that the rate will be kept the same. And then out of the US, there's a slew of data, some housing data, some jobs data in terms of continuing unemployment numbers, and some data as well out of, I think, retail sales. So there's definitely going to be some movement that could be triggered from those larger announcements tomorrow out of the UK and the US in particular. So leading up to that, it's kind of a wait and see. Maybe if no major headlines hit unexpectedly, it's kind of a wait and see, technically speaking, that I would suspect to see some ranging movements, meaning movements that are not running in one direction too strong, because there wasn't a lot of major news today, and there's big news tomorrow with some of the announcements. And so the big breakthroughs could happen as that news comes in tomorrow. And leading up to that, there might be some ranging movements with many traders in kind of a wait and see situation for the bigger data tomorrow. And so that's the sort of thing you want to go through in your mind before you start your technical analysis. A lot of times is to understand, where do we sit fundamentally in terms of the headwinds. And so now we can start to take a look at some signals and maybe see what's the technical setup within the signal, and see if that kind of fits what we're thinking the fundamentals would drive as well. And so we can put any instrument really that we want. Maybe we look at gold or something like this. And not everything has a signal, but I do see gold has a live signal right now. That's what this symbol is. So if we click on that symbol, we get the signal off to the right. Okay, and this was a buy signal. It shows that the market already hit one of the key levels. It tells you here. And what that key level was the pivot level. And so this line here within the signal is what we call the pivot level. And this was a buy signal, so that the signal started with the movement above the pivot level, expecting gold to climb. It tested the pivot line and dropped below. So technically it broke this key level and gave a look that maybe you might want to think about selling to go towards these lower points, because it does say if it drops below the pivot, you could think about further dropping towards the red lines down here, which are support levels down lower. It tested and came right back up. So at this point, this looks like a valid buy signal that the pivot level was tested and confirmed to hold as this movement went back up, okay? And so the USD appears to be weakening right now against gold. It makes sense perhaps because the past couple of weeks, data out of the US fundamentally has been weaker than expected. Jobs data, inflationary data, the economy in the US has shown signs lately of slowing faster than expected. That increases the possibility of a rate cut this year to bring back down interest rates in the US if inflation really is dropping faster than expected now. And so that has had a weakening effect on the US dollar. The anticipation that, hey, there very well might be a rate cut this year, because, and if you don't understand the effect there, as you lower interest rates, currencies tend to weaken. And the higher the interest rate, the more expensive that currency is to get a hold of. So it strengthens it. And so US dollar's been very strong the past year and a half plus with all the rate hikes that came in as inflation was a problem, and they're raising interest rates to try and bring down inflation. Well, US dollar's been strong, but now the anticipation is maybe rate cuts could start sometime soon, and the US dollar has shown signs of some weakness. So my point here is there are announcements tomorrow out of the US that the anticipation is, wow, maybe that data will be weaker than expected as well. And so there's reason fundamentally for the US dollar maybe to not be strengthening rapidly leading up to those announcements and perhaps even weaken. And so with that as a backdrop, fundamentally, you could understand why gold might be able to climb against the US dollar leading up to those announcements tomorrow. Okay? And so this signal is a buy signal. It's still valid. It's above the pivot line. And so the look here is to take profit between 23.35 and 23.41. That's what these green lines represent, is a take profit suggestion. Okay? So now what I do, let's say indeed I'm interested in this, I can start to draw some lines on the chart here to represent the pivot line and other lines that are here. So 23.26 is the pivot line. That's right about there, give or take a few cents. Okay, 23.26 is our pivot line. If it drops below here, it's a sell signal. So I might put my stop loss below this pivot line. And if it drops maybe below the wick where it tested it, then I'd get out of this buy move. Okay, and then the take profit suggestion is up above 23.35, up even as high as 23.41. And so if we go to, say, 4-hour candles, we should be able to bring that into view. 23, and I can get rid of these old lines. I've got more here than we need. And if you don't know how to draw the lines, I'll delete this instead of just dragging it down. You just go here. It's a line drawing tool. Pick the kind of line you want. I want a price line, which goes straight across. And now our first take profit suggestion is 23.35, which is down here. Okay, right about there, give or take a few cents. Okay, so you can see why is the take profit suggestion here as the first spot maybe to take profit on this buy signal. You can see there's resistance here on the 4-hour candles. It hit this area and pulled down. It hit this area again, pulled down, and now it looks like it's trying to push back up to that price. So when you see the take profit suggestions in the signal, it's based on the technical analysis on the chart. This was resistance, 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 and it went down. It was resistance again and went down. So they're saying in the short term, if this goes up, that's a spot where it might have trouble breaking, and you could think to take profit. Now, they always give you a second option that's further away. So 23.41 is here, approximately there. Again, give or take a few cents. And you can see why did they pick this as a second choice, because that's the next resistance level here on the chart, where back last week, this hit this resistance on the 4-hour candles and went straight down. So they see resistance between this line and this line on the candlesticks. Resistance being a spot where the price went up to that area and couldn't break and went back down. And that happened at both of these levels in the past week or so. And so that's the take profit suggestion if you're buying on this for a short-term type move, that it might at least encounter temporary resistance. Not that it couldn't break these prices, but it could encounter temporary resistance at these prices based on the past candlestick marks, okay? And so let's say you wanted to buy on this now. So we go ahead, we click buy. And my take profit probably should be before this second resistance or lower if I'm following the signal. So let's say 23.40 or 23.41 would be just before this high point here. So take profit 23.40.5. Okay, I'll come in 50 cents or so below that resistance level. So take profit 23.40.5. It's just before this resistance. Stop loss down below the pivot. It would have to reverse and become a sell signal according to that signal. If it drops below 23.26, they're then recommending you sell, because that would show a sign of a downtrend, a reversal of the trend. So if I put my stop loss below this wick, below today's low, or the low of that spike right here, which I think is today's low, so 23.23 would get me below this spike down here for my stop loss. So stop loss 23.23. flat I could do. Okay, and that gives me a little better potential profit, 3,800 plus, compared to the possible loss, 3,136. Okay, and it doesn't always have to be that way. Sometimes you can risk more and go after a little less profit. It's just the way it sets up right now with the current price point, that it's a buy signal, and to get below the pivot level and today's low, I need to be down here. Okay, I could bring my stop loss higher and just be below the pivot without being below today's low. Okay, I could bring it up like this and still be below that pivot level and put this at 23.24 or 23.25. I chose to put it below today's low in case it tests the pivot level again without breaking. Okay, now, once I'm set on my exit strategy in terms of stop loss and take profit, okay, and my take profit is up just below that second resistance right there. Okay, so once I've got that set, then now I can adjust the trade size to be the amount of risk and potential profit that I'm looking for on the trade. I probably wouldn't want to risk 3,000 with a balance of 63,000. That's over, it's like 4% risk or something like that. And maybe I only want to risk 1% per trade or whatever that is for you. Then you adjust the trade size to be the right percent risk. So if I did a lot size of one lot, now I'm risking 750, which is a little more than 1% of this. Okay, 635 or so would be 1% of 63,500. So I can be as exact with that as I want. Okay, I can come here and say 0.8 and see where that takes me. That's 615 possible loss. That's below 1% risk with trying to make over 1% profit. Okay, so and I can zero in, as acutely as I want to the amount of risk compared to profit that I'm looking for. Okay, and so now that the risk management side of things has been calculated, possible profit almost $800, possible loss 634 or so. Now I can make my move. Okay, so I've gone in. I've not just blindly trusted the signal. I looked at the signal, okay, that was provided from Trading Central by clicking here. Remember, click on the little symbol, and there's my signal. Okay, I didn't just blindly buy because it says to buy. I also kind of thought about, is there reason for gold to climb against the USD from a fundamental perspective? And my answer was kind of, well, yeah, there kind of is. The data the past week or two out of the US has really shown a slowdown in the US, increasing the likelihood of at least one rate cut in the US. We talked about that. So the fundamental side is there for the USD maybe to weaken against the commodities and other currencies. And with big announcements coming tomorrow, it's kind of a wait and see. It's not like anyone thinks for sure the USD should rapidly strengthen right now. So there's not a lot of reason to rush in to the USD right now. So the fundamentals are, I think, leaning towards the USD weakening maybe against other assets leading up to tomorrow's announcement. So from a fundamental perspective, this buy signal makes sense to me. And that's kind of the mental process that maybe you should go through before you trade on a signal. Is, do you, from a fundamental perspective, believe that that signal makes sense, not just the technical analysis? The technicals look good here. It's above the support level after testing it and going back above. This was support, support, support. You see, it was holding above this price for a long time, and it kept bouncing back above. So the technicals here were good. Makes sense why they said buy with this signal. Then if you can align the fundamentals as you know it, from announcements, from headlines, and they all agree, then it makes sense to go ahead and make the move. Okay. Now, another option with this, let's say you want to hold the trade through the announcements tomorrow, but obviously we don't know what way those announcements will come in out of the US. Will they be worse than expected, better than expected? And that could swing this movement one way or another. So if you were wanting to try and anticipate that, hey, maybe the data will be worse than expected and gold will climb even further after the announcements against the USD, but you know there's a risk involved with that things could swing the wrong way if the data comes in better than expected out of the US. So maybe you want to buy on this, but you want to protect it with something like AvaProtect. And since I want to get through tomorrow's announcements to see if that really swings more momentum on my buy move, maybe, then maybe I protect not just by the hour, but I might protect my trade through the day tomorrow or even all the way to Friday. I can protect up to 2 days. And then I adjust my trade size again to be the amount of cost on the protection that I'm willing to risk. Now I don't have to risk to a stop loss because any negative movement's paid back. Any negative movement that occurs during the protected time period. So once I start this trade for the next couple days, any negative movement, I don't need to put a stop loss. I get paid back when the trade closes within the protected time period, or if it's still open when the protection ends, I get paid any negative floating and the trade can keep running. Then I could add a stop loss at that point. So AvaProtect allows me to not have to worry about how far away do I need to put my stop loss? What if it hits your stop loss and then it goes the right way and you take the loss before it goes the right way? You don't have to worry about that when you use AvaProtect. Okay, so if I know there are big announcements like there are tomorrow, and I also think in the short term it might start trending the right way, but I want to hold it through those large announcements, then rather than risk this flying the wrong way and hitting my stop loss, I can protect it with AvaProtect for the length of time that makes sense. Okay, and so if I take the right trade size, I can risk the same amount as I am to my stop loss on the other trade. So if I go 0.7 here, that's about 1% of my balance. Okay, 647. I could go a little bit smaller, 0.65, and that's 600, 0.68, 628. So I'm zeroing in on the 635 range. And now the cost of the protection is almost exactly 1% of my overall balance. Okay, and so I can take a trade in this manner as well. And now I'm trading 69 ounces. And the cost of the protection is about 1% of my balance, and I go ahead and buy. So that cost is up front. Now I paid 1% out, but now I get to wait 2 days fully protected. And if it makes back more than the cost of the protection, and it doesn't have to move far, $10 an ounce, I've already made a profit more than what the protection costs. And in 2 days, with the big news that's coming in tomorrow, gold could move $100 an ounce, right? We've all seen, if you've watched gold, when there's big news, especially anything that deals with inflationary data, gold can really have big movement. So I'm trying to take advantage of the technical direction right now, short term, with that first example, without the AvaProtect, where I'm using a stop loss based on the support and resistance levels from the signal. And then a second trade is more based on not just the technicals right now, but also the fact there's big fundamental news coming tomorrow, and it feels like the trend is trying to go up. Maybe that news could help it surge even further. And if not, we're protected, right? We're protected with AvaProtect. So a couple different ways to go after the same instrument, one with more of a short-term move off of that signal we looked at, and another with a longer-term move with special features like AvaProtect to assist you on the protection side. Okay. Any questions on what we've gone over so far? I'll pause for a moment. Okay, great. I don't see any questions popping up, so I must have been clear. Remember, all of these sessions are recorded, so if you want to go back through everything we just covered, by tomorrow this will be uploaded to our YouTube channel, and you can go through, pause it and replay it, etc. To make sure you catch everything that we're going over, if anything was a little fast for you. But again, you can ask questions as well if you want anything repeated. And, you know, I don't know how familiar you are with this platform. Some of you are new to AvaTrade. Some of you have been with us for a while. But you can go back, you can look at your open positions here, and you can see which one's protected. This one shows the AvaProtect symbol. This one does not. So this is the one that's protected with our stop loss. And when it comes to that, you can always go and edit the position, clicking here, and adjust your take profit, your stop loss settings. And you know, when you're looking at the chart from this perspective, where you're looking at your open trades, you can move your stop loss and take profit by just simply dragging it on the chart. You see, here's my stop loss line. If I left click and drag, I can move that. I can reset my take profit and stop loss without having to type it. It automatically adjusts the settings just by dragging it. And if I go to larger candles, I'll see also my take profit line up here, which is here, okay, up in this area up here. And so very user-friendly for those of you who aren't familiar with the platform. Now, where else can we go for fundamental news? There's a news feed here. And this, we get into more detail on these tools in the fundamental webinar, but you can quickly get a understanding of what's going on in the news here. And there's also a market buzz feature here. And what's nice about the market buzz is it also gives you technical analysis, okay, which is our focus obviously right now. As you're reading the market buzz for any instrument, I can click, maybe you want to see what's the latest with Apple or NVIDIA, the ones that are trending the most or the biggest. You can also look at the ones that are trending less. Doesn't mean they're not good opportunities, they very well could be. You can switch categories as well of what kind of instruments you're looking at, not just stocks. And so whichever one you choose, you're going to get a technical prediction here. There's a trend analysis with all the rising that NVIDIA has done. And boy, this has been right week after week. It keeps predicting a 20% rise, and it keeps happening amazingly. Again, it's predicting in the trend analysis 18.1% rise still in NVIDIA. And if you click on that, it gives you the technical analysis. It shows you the pivot line. In this case, it's the blue line. As long as it stays above that blue line, they're predicting that it will keep rising up towards 150 a share. Now, before the stock split, they did a 10-to-1 split recently. That would have been a price of 1,500. So now, if you had one share, now you have 10 shares. But it's the same idea. The price is predicted to continue to climb up towards 150. Okay, and it gives you two suggested take profits. One's at 150, one slightly below. So, you know, this continues to be a big story that helps to drive the rest of the stock market, especially the tech-heavy NASDAQ, the US Tech 100, keeps climbing right along with NVIDIA kind of leading the way. And so we've got the technicals here for you, just like in the signals that we looked at in this trend analysis. And it talks about the technical indicators that are used here as well, and all of the key price levels. So easy to find information. And let's say you want to learn more about the fundamentals of NVIDIA. Well, you can read the articles here. They're coming in by the minute, by the hour. Whenever something new is found, it's posted here. And so we see here NVIDIA share price surpasses Microsoft in worldwide company value. Okay, so their market cap value for NVIDIA is now greater than Microsoft. And I don't know that anyone would have predicted that just a couple years ago. It's this AI boom that has really driven NVIDIA. So you've got a lot of great technical data on any instrument you want just by clicking on the trend analysis here. And again, right along with it, some fundamental news if you want to take the time to read it. Okay, I think this is a good place to stop. We've been going for a good 30 minutes plus, and so I know you want enough information to learn some things, but I also know too much information at once, and you start to lose the attention span as well. So I'll ask any last questions, any comments that you might have before we end the session today. Okay, so I must have been clear. Thank you all for joining. Like I said, this session will be on the YouTube channel by tomorrow. And I have another session tomorrow, earlier in the day, 11 a.m. UK time, and we'll spend more time on the fundamentals. We'll still touch on the technicals, but we'll spend more time on the fundamentals. We'll go over the past movements surrounding the announcements that are coming in tomorrow, how you might be able to play those statistics to get some trades potentially with those announcements tomorrow, and also any announcements coming in on Friday. typically we'll have time to take a look at those as well, okay? All right, everybody, thank you for joining and good luck with the trading the rest of the day. Bye for now.